All right, good afternoon, everyone. It is December 11th. It's Sunday. Welcome to the Stack Sunday prep session where I aim to prepare myself and all of you for the trading session ahead of us. Just a few keynotes, right? Tuesday, we have CPI at 8:30 a.m. Eastern Time, so 1 hour before the market opens. A lot of traders get a ton of FOMO seeing that huge move leading into CPI. Really focus on trading the chart in front of you. I tend to or try to ignore that big movement in the pre-market because look at Friday, right? I think this was PPI, I'm pretty sure. PPI dropped down. How many traders, because they saw this big drop in the pre-market at 8:30, same time PPI is going to be out, of course, saw this big drop, was like, loading 393 or, 390 puts in their active trader, right? And had this bias going into the open that we would continue selling off, and then found themselves either one getting stopped out or struggling trading this price action, right? Because they had that bearish sentiment all from this large PPI drop. Oops. Right. So focus on trading the chart in front of you. That's going to be a huge kind of focus on this prep stream. Okay. And on Tuesday, you have FOMC, or not Tuesday, but Wednesday, you have FOMC, right? So I really expect a lot of chop, low volume consolidation, maybe a pretty tight range leading into FOMC, which will print at 2 p.m. And remember, guys, typically the first move at 2 p.m. is the fake move, right? And you should, really be patient looking for the much more consistent move at 2:30 when Powell begins speaking during the conference. So, I don't really recommend holding anything into that FOMC unless, you're going in with a, pre-planned straddle or strangle or something like that. But you could lose on both, right? If we just kind of stay flat, which I don't really expect, but you just never know in this market. So let's see what else I have here to start off. I also have this note, right? So CPI Tuesday, FOMC Wednesday. This will be a huge testament to your discipline, and please focus on trading price action that's being developed in front of you rather than large inflections or large moves in the market. Okay, so I'm gonna go into a little bit of the review from Friday's chart, how one could have traded it with a bit more finesse and precision, and how you can apply this going into next week so that you can protect yourself and have a little bit more edge in the market. Okay, so on Friday, right, big drop from PPI. Right now, normally when we get a large move in either direction in the pre-market, the market tends to do the opposite, right? Really just trapping a lot of those retail traders and those who are FOMOing into the potential trend, right? Quote unquote trend. So whenever we're selling off into the open, right, like a big move like this, I'm always looking at the opposing, direction. So instead of, FOMOing onto puts, right, I had calls loaded in. We had talked about this. We had the plans, hey, if it was going to bounce out of this previous day low demand, it has really good risk to reward, right? Aside from all of these plans that I have labeled out here, I want to keep that for later. You saw this big drop down, it bounced, right? Big buyer hit, pop back down, bounced, right? Pop back down, bounce. So you had higher lows leading into the open, right? I mean, I hope everyone saw that. That is, low, higher low, higher low, right? And then all they had to do was break the higher high. Broke the higher high, broke above it based on VWAP, and then pushed higher, right? Excuse me. So, don't focus so much on these big candles. Really just try to, thinkorswim's lagging. Really just try to ignore these as best as you can, because that will allow you to just focus strictly on this kind of price action as it's being developed rather than, some kind of euphoric trade that you're wanting to hit, which really Friday's price action was okay. It was really reminiscent of last Friday's price action, which was very choppy, especially if you were trading 0 DTE. But I learned my lesson from last Friday and was able to hold on to trends and actually take really solid trades just by focusing on the options contract and pivot points. Okay, so I don't know why Thinkorswim is lagging here, guys. Normally it doesn't. Let me catch up on Twitch chat. How far of a drawdown on an option do you give yourself immediately after entry before you cut the trade? 10 to 20%. I typically range in between there, 10 to 15. Sometimes I'll give it to 20% if I feel like I'm getting wicked out. So like, let's say that you enter, like, hey, if this was drop down, right? Let me go to a clear set just so it's a little bit easier to see, guys. Let's say that you're trading 0 days, okay, or whatever you're trading, doesn't matter. Okay, let's say it drops down like this, drops down, boom, it pops up. You hit your puts right here, right? You hit your puts right there into the suppliers, whatever, and it pushes a little further against you, right? You might be up, or down 10%, 15, and this little fake breakout here, the potential fake breakout, because you never know exactly, but I always expect that. Could be like negative 20%, but you only sit there in pain for just a few minutes, right? Maybe not even a few minutes. Maybe this was like let me look at the one. Yeah, I mean, look at that, right? Like this was your stop area. You sit in pain for like 1-2 minutes, and then it knifes back down, right? So like you want to prevent yourself from getting wicked out, right? Or you could just hey, hit your stop loss. It comes back to your entry, right? And then 84% roll it, which is exactly what I did on Friday for that kind of trade. So, but, I've been trading cheaper contracts for the percentage multipliers, and, it might say 20%, and I could be down like 8 cents a contract, right? Which I'm not sweating. So let's see what else we have here. Okay, cool. So let's continue through the review, right? Now, I want us to all focus on pivots, and also these supply and demand zones, right? I grabbed these supply and demand zones with you all in pre-market on Friday, leading into the open. So, right, we drew this previous day low demand, previous day high supply, right? I know that these are the two major zones because these are your daily candle highs and lows, okay? So, leading into the open, right, we sold off and bounced off the previous day low. Some of the best trades that you can take and size into are when you take it from a zone to zone, right? I mean, super simple. I mean, and it went back from what? From previous day high zone to previous day low zone, right? Those are your best trades. Sure, a lot of traders are like, oh, well, what about the crazy trends that go 10, 15 points or whatever? Majority of traders are not holding full into that trend, right? But if you have this zone and you have a larger target zone, you push out. That's, let's just say you're scaling out in quarters, right? So a fourth every time. Scale out, that's a quarter gone. 1 quarter gone. Breaking a pivot, another quarter gone. Broke another pivot, right? So 3/4 of your position are gone. You only have 25% left on the runners. You likely are moving your stop loss or just paying attention to the supply zones that are being developed as it pushes, right? Like here, rejected again. This is where you get your last bid out. This is what runners do, okay? Right? Runners allow you to hold on to this trend due to the fact that you offloaded risk. Majority of traders, I'd say 95% of traders, cannot hold from point A to point B with a full position size, right? So I'll say it again, 95% of traders cannot hold from point A to point B a full position size, okay? Because you don't know how far it's going to go, and the name of the game is consistency, extracting money from the market. It's very hard to sit here and see yourself up an X amount of dollars and see these big swings in your P&L, right? Because, of 0 DTE, consolidation, whatever, right? So you're going to offload pieces at the time, right? To allow yourself to hold on to the trade. What most traders are going to do are this. They take one piece and they're like, oh, they see themselves a little bit green, and they take the entire position off, right? That's jumping the gun. You're getting a little too excited. Allow your trades to work out. Not every trade has to be 5 minutes or less, okay? Little Skittle said, think about joining the Discord. Do you happen to have a 1-day free trial to check it out first? Thinking about the lifetime. I'm streaming this entire month right on Twitch. So, I don't do any kind of free trials or anything like that. It's too much to juggle. But I've been already streaming on Twitch the last 2 weeks, and I've shown you all, right, the consistent methods and strategies that I apply each and every single day to the market that provide great trades, right? So just stay tuned on Twitch this week, right? We'll be trading. You won't have access to the Discord, of course, right? We're all talking. I'll post like trade alerts and stuff like that. These are all my alerts. Last week, maybe not last week, the week before last, we had like a couple 300 percenters, and last week we had like a couple 200 percenters and a bunch of 100 percenters. So, also, what I want you guys to focus on is this. So I want to go to another cleared set. Whoops. Okay, and it's pivot points. All right, pivot points. So here we go. Walking through this entire day, right? This is how everyone should have been marking pivot points. I marked them on Tesla, kind of too small of a time frame earlier, so I got stopped out on those puts, but was still holding the core of the calls, right? But look, what do we need for a bearish trigger, right? Does anyone have the answer? What do we need for a bearish trigger, right? To say, hey, the trend's flipping. All right, lower low, lower high confirmation, right? Either one, lower low, lower high. I really like lower highs because it shows the pressure being pushed down from sellers, okay? So you can see here, right? Whoops, that's a little flat. Lower high, right? And then boom, higher high right here. Okay, so shorts lost this battle, this little downtrend, right? Pops up, higher high again, right? Now, what stuck out like a sore thumb, guys? Right, on this entire chart, what stuck out like a sore thumb? And I'm not talking about a pivot, but I'm talking about a price action candle. Yeah, hammer, inverted hammer. Thank you guys, right? That's from this session, not from last week, but the week before in the EDU Google Drive, right? So you have this big inverted hammer, and it's not even on a large time frame. It's on the 5 minute, okay? So hammer, big upper wicks. All right, so I use the word confluence quite a bit. Most of you probably learned it from Brady as well. Okay, so you have an inverted hammer. That's a huge red flag for buyers, especially on a breakout. Right, so you have higher high, higher high, higher high, right? Let's label them. Okay, so you have a higher high, higher high, higher high. Okay, you have a bunch of higher lows. I'm only going to put a few. I'm not going to overdo it. Right, now look at exactly what happens. I like lower highs better because, like I said, it shows where the sellers start to push into the buyers. Okay, now you get a lower low, or lower high, excuse me. All right, so lower high. All right, now look at this pivots. It pushes down, it bounces, right? So a higher low still, right? So still a higher low, duplicate the drawing, push it through. Now, if it's going to hold this trend, okay, which it already looks weak. You see weakness on the 5 minute, 9 and 20 already. The 20 is already cracking when it was holding before. So it's showing weakness, inverted hammer, right? Okay, so drops down. On this next push, if you don't get a higher high, it's going to be a head and shoulders, right? You can see this head and shoulders neckline like right here, right? So drops down, pushes up. Doesn't break the head and shoulders neckline, so confluence, right? So let's write this list out. Confluence list. Inverted hammer. Head and shoulder neckline. 5-minute EMAs breaking. Okay, and lower high, lower low pivots. Right? So, I mean, like literally the market is screaming at you. That's probably too big. the market is screaming at you, right? For, well, let me write this. There we go. All right. Market is screaming at you to take puts, right? Or to at least give risk to reward for the puts. Okay, so look, cracks through, lower high. Right? And then boom, let's get the lower low. First lower low is right here. First major lower low, I'd say. So boom, right? And I'll make these red, like so. I want to show the first lower high. Okay. Now, for me, when it's peaking up this high, okay. So look, so scared. I'm gonna answer your question, Nitio and Shiny. Right? Sorry, I'm just going through this kind of example here. But Scared said, where would you have taken it if it had where you would set risk? Okay. Now give me a moment. Give me a moment here. What was it? Okay. So right here. Now, whenever I see a fake out breakout, right? And I see like, oh, you know, like think about like the emotions that surround this for any retail trader, right? So it's pushing up, and then it finally breaks, right? You got everyone in every Discord typing out SPY new high a day, typing out, you know, all of these crazy things. You know, people are like, oh, we're ripping, blah, 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 right? Focus on that, on those really, you know, emotional spikes across the board, because those are where you can make a ton of money just off of them, you know, being euphoric and not managing positions appropriately. Okay, so when it popped up and created a fake out breakout, this is a great area. I would say obviously the best entry for puts, right? And it's not even really that risky. It pops up, focus on your 5-minute candle, use that as your risk over the high. If they stop you out over this 5-minute candle, it continues pushing. You took a very low risk trade, right? Stops happen. You know, you have to try at least to get skin in the game, right? Otherwise, right, if you're hesitating, whatever, you're just going to watch this fade against you. Now, remember, what are your best entries, guys? Your first and second pullbacks after a rejection or big move down. So inverted hammer candle, spinning top, bearish engulfing, right? So when it drops down, anyone who missed this short here over the high of day for a fake out breakout is going to look for the first and second pullback. Drops down, pops up, right? Now it's like, oh, well, how would you have known to get there? Just draw the upper wick, right? Or you could draw a seller's ask, right? Just looking at the wicks on a 5 or 10 minute chart, seller's ask right there. Look at that, boom, sold over, okay? So drop down, first pullback, drop down, second pullback. Okay, these are your best two entries if you miss the initial fake out breakout, right? Because look, afterwards, it just spills. It's very hard to get a trade. What about the third pullback? So first pullback, second pullback, dropping through, third pullback. So what's up with these guys, right? Remember, how does the market move? Consolidation, trend, consolidation, trend. So what's going to follow after a trend? Consolidation. These are the scraps, right? This is where traders get theta decayed because they think we're going to continue dumping. You do continue dumping, right? But, you know, let's say you hit this third pullback, you make a little money. Sure, you could have hit that, but you wanted this dump. It brings you back and holds you hostage for a minute, right? So from 2 o'clock here, doesn't start selling again for a whole hour, right? So if you're trying to hold a 0 DTE for a whole hour and it's a little further out of the money, you're going to get theta decayed most likely. There you go, Shiny. There you go. Okay. Let's see. So, right, focus on these pivots. This told you you had multiple confluences to take the short, right? The only reason why you didn't, most likely, is due to the fact that one, the emotions were too high, so you could not accept the risk, right? So you're too nervous to jump into the trade, and just understand that, hey, any trade that I take, I understand that I can lose this trade. I mean, every trader knows that, right? So what's holding you back from trying high probability, high confluence trades, right? Ask yourself that, right? What's stopping you? The number one thing is going to be your emotions, right? Your relationship with the market and how you view, you know, high quality trades versus low quality trades, right? High quality trades all up here, first, second, third pullback, pivots, all the confluences. But why do traders love to take calls when it rips up hard or when it breaks over a high of day break, right? Why do traders have a high confidence in those trades, but you guys don't want to buy the ugly, right? The ugly is what pays, and it's what pays us daily in the group. Okay. So let me go to another set. I also want to talk about orb levels, okay? So I see a lot of you guys struggling with this. It's pretty simple, right? You just go to your 30-minute candle. First 30-minute candle, mark the high and the low. You see in yellow here, I have written out orb low and orb high. Okay, now I have a few rules with the orb. Here, remove this. And look, see, like we labeled this all out. Remove this, remove this. Okay, so I have a few rules with the orb, right? It's not going to be a trend day unless you're outside of one of your orb levels, right? And the only way that you really sustain being outside of your orb levels, your opening range breakout levels, is if you break up, right? Pull back, base on it, and then continue higher, right? I mean, you guys have heard this from me if you've been in any Twitch streams. This is what's key, the break and base, right? But about the last 3 days, right, it has shown you how powerful the orb is, right? Especially since most days that we're trading are not trend days, right? I mean, I can honestly say that. And I'm not going to say majority, but I'd say, maybe 60% of days that we trade are consolidation, if not more. Okay, so if you don't have the break and base above the orb levels, you don't have a trend, right? So let's type that out. No break and base above orb levels equals no trend. Okay, or continuation. You guys on Twitch or, Discord, whatever, you guys screenshot these if you want. Okay, so no break and base, right? Now, if you don't get a break and base above and the sellers, let's say, are maintaining the orb high, just a 30-minute candle high, right? What typically happens, guys? What happens? Anyone have the answer in the group? Excuse me. It goes to the orb low, right? Or the opposing orb level. Okay, so if they maintain the orb high, a fantastic target for you is the opposing orb level, right? So rejected this, no break and base. You got consecutive, like I just showed you, lower high, and lower high, right? And then sells all the way down to the orb low. Okay, now what about the previous day, right? So let's say orb low, right? And then let's say, where's 10 a.m.? Right here, 10 a.m. candle orb high, right? So you have, I'm not going to label them. The only two levels that I'm going to have on the chart are orb high and orb low. Okay, so you have your orb high and your orb low. No, it breaks above it, but does it base and then push further? No, right? It pulls back and forms a lower high, right? And that lower high confirmation is what sends it back down to VWAP. Okay, now, this is not always going to happen. It's not always going to send it back to the orb low, right? But you can see that a buyer's bid was caught right here. So when it popped back up to the orb high and couldn't break and base above, rejected off of the orb or the high of day supply once again, right? Got sent back down to where buyers are most recently located, right? Now, the rule typically is that you can target the orb low, which is fine, right? But always remember, buyers can and likely will step up their bids. Same thing with sellers, right? Pushing down their asks, right? So let's go to the day before that, right? So you have your orb low here right at 10 a.m., your orb high right here. This is the high before 10 a.m. Okay, now look at this. Okay, your orb levels are established. It pushes down. It cannot push below the orb low, right? Knife down again, couldn't push below the orb low. Where is it likely going to go? To the orb high, right? We traded this day and took that trade. Okay, now you didn't get a break and a base above the orb high, right? You didn't get this. So what's likely going to happen? They're going to send it all the way back down to the orb low, which is exactly what they did, right? I also talked about this, right? If you're not breaking and basing outside of your orb levels, it's a range day. Look, the entire day you maintained in between your orb high and orb low. Okay, now look at this. Look at this day, right? So you have your orb high here, okay? And then where's the orb low? Right there. Oh, dude, look at that. Clean, clean. Orb high, orb low. Breaks through the orb low. You can see it breaks through it, pulls back, retraces to it. So the break and base, this is where you base risk, guys, okay? In confluence with your EMAs. And then what? Right? Outside of the orb levels, what typically happens? Trends, right? You got a whole trend. Went 4 points to the downside because of that orb low break and base. Okay? So does that make sense for everyone? Let me read the chat a little bit. Let me ban someone. All right, cool. Let's see here. In addition to the market confluences you listed before, Friday also had the no BNB on the orb high breakout. So we're looking for a rejection to the orb low. Okay, you talking about this Friday, likely, right? BNB stands for break and base. Okay, so a break and base is pretty much this, guys, right? Let me pull this open. This is pretty, screenshot this if you're in, Twitch or Discord, whichever one, right? This is pretty much a break and base, right? The resistance breaking through. I have no value in the breakout, right? Stop chasing breakouts, guys, please. Okay, if you're gonna learn anything from me, we don't trade, or at least try not to, right? Really try to enforce the no breakout rule, okay? Because why? If it's truly gonna break out, it will pull back and base. Now, maybe not exactly to the resistance. Remember, a break and base can be on that key level or an EMA, right? Or an indicator, VWAP, whatever, right? So just keep that in mind, please. But I always look for the retracement. If you're like chasing this breakout, you're late, right? Why? Because everyone who bought down here is selling over the resistance, okay? So this is pretty much just a break and base, right? Breakthrough, pullback. Don't focus on this, the entry and stop. I mean, the stop is right. I'm maybe not entering as soon as it breaks out over this candle, but, it's not a bad diagram. Let's see. What about drawing a trend line under the higher lows and a short trend line is broke? Guys, I was talking about it in during the live trading stream on Friday. I was like, look at my charts, right? Like, do you guys see any, like, look at Tesla on the intraday Friday. No diagonal lines, right? Let's go to Apple, right? 5 minute. No diagonal lines. Let's go to SPY, what my chart was looking like on Friday. Not a single diagonal line, okay? Understand that, yes, there's value with diagonal lines, sure. Like, I completely get that, right? Like, I think you're saying, like, something like this, right? And it broke in base. That's fine. Sure, it worked out on this point in time, but what's going to help you get a stronger sense of price action day in and day out are horizontal levels, okay? Like your pivots like this, like across, right? Because, let me clear this. Maybe I should screenshot this and then post it in the trading floor real fast. Okay, so that's posted, so I can clear it out now. Right? So like the same thing, right? Like we could have got the same kind of look here. But what about the seller's ask, right? Tweezer top, fake out, breakout, bearish engulfing down, right? So there's a seller here off of that reaction. So let's label it. What time is it? 12:38. Okay. Okay. So right here, you have a seller's ask. So you know that seller's territory is above this 397.27, right? Like you're not that too far away, but on a 0 DTE, it does make up for it, right? Your entry up here in the seller's ask off this horizontal level, let's just say that this is a 30-40 cent entry on the premium, right? That could make you 3, 4, 500%. But just a little bit later of a push might bring that contract down to like, or might bring it up to like 60 or 70 cents, which will still make you good money in terms of delta. But I always try to look for that percentage multiplier on a 0 DTE, right? On high confluence kinds of trades. That's, as close as SPX as I'm going to get because it's just not, SPX is just not as consistent as SPY, right? I can size much heavier into SPY and hold on to cores much longer. Some traders have their edge with SPX. Everyone has a different way of breaking down data. There's multiple ways to skin a cat, right? Like I get it. But for me and what works for me consistently are these horizontal levels, right? Because like what about like 1 second. Let's see. Like what about this guy? Or no. We'll just forget it. I'll go over through. Mr. Diamond's question. He said, "Love the orb." Okay, not a question. Yeah, for sure, Denali, right? Like the higher lows. And something that may have tricked a lot of traders here is this, right? Like you saw it like push into like a buyer's bid area. Whoops. Right? Like you saw like all these lower wicks right here, right? Buyer's bid was hit, right? It's all about pivots. Okay, so even though you're getting higher lows, right? These are not going to be perfect. Even though you're getting higher lows, right? You never break a higher high. So these sellers here on that push up are very, very comfortable over VWAP. They know that you're not going to push higher unless you get a break and a base above VWAP, right? Which never happened. Yeah, no problem, no problem. So, and I'm not saying one's better over the other. I'm just explaining to you guys my experience trading, right? Horizontal levels to me are much stronger than a diagonal level. But teach their own, right? So, what else do I have here? Oh, I wanted to go over a couple setups, right? So some things to keep watch on. Tesla's daily. Right now, we have CPI and FOMC this week, so I'm not swinging really anything going into this. Maybe I'll hold a straddle. I don't think I'll be able to trade FOMC on Wednesday. I do have family coming into town. I'll try to see if I can alert a straddle or something, or maybe I can just try to alert something while, or after 2:30. But we'll see. But what I have noticed here is that Tesla has made a higher low, and like I said, right, if whenever a gap is filled, don't expect, oh, they filled the gap, it's going to continue selling, right? A gap's filled, and likely you meet buyers or sellers on the opposing side. So they did bounce out of this low of 52-week low demand, or I guess pivot, I would say. And I would pay very close attention to the reaction to these 9 and 20 EMAs. It likes to hold it, especially since the cross. And it'll peak over the daily 20 just a little, but it won't close over it with strength. So pay close attention to this 185 area if they do want to push it up. And ultimately 200, right? That's going to be a huge spike for Tesla. Now, if they crack below this 166, I believe on the daily there's like a cluster close to like 150s. Yeah, right here. There's a resistance there, but then you start seeing support down like 140s, really. 130s, 140s. But look at that, right? 155. I would look for that whole dollar psych first, that 150. It's going to be a huge whole dollar psych. Probably not going to hold right on 150, but a couple points above or below. Skittle says, I know the future is uncertain, but wondering how long you plan on doing streams in Discord. What if you join the lifetime and you stop doing this in 6 months? That's not gonna happen. I mean, I could die, right? But I mean, this is a passion of mine, right? I really love trading, and it's not too heavy of a workload. I trade from 8:30 to 12 each day, and I'm not going anywhere. Right? I've had that question quite a bit, but I'm not gonna do anyone dirty like that. MCO says, what expiry would you think about straddling for FOMC, and when are you thinking of entering Q or SPYs? If you haven't thought about it, that's fine too. I'd probably look at SPX, honestly, and look at some cheapy contracts, something probably like $1, close to $1. And from your guys' perspective, if you're just going to take one contract each, right? Now, I understand you could get decayed or whatever, but FOMC provides a trend. It guarantees a trend, right? The last FOMC, I think, what did we rip? Like close to 10 points, right? So you know that one of these SPX contracts, whether call or put, right? That's why I'd look at a straddle, right? And maybe not super far. I think IV will be pretty high, but the risk is rather low for those of you trading, one contract for each of these straddles or strangles, right? So like, let's say you buy something, even if it's at like 50 cents or to $1, right? You're risking anywhere from $100 to $200. I don't think either of those contracts would go to negative 95%, right? But the IV is pretty juiced up, like Shiny was saying. But we've seen a lot of these straddles, right? And even on one pop, right, you could scale out of the other and then still holding the other one, which obviously be red. And then after 230, we'll get to that guaranteed trend during Powell's conference. And, we should see 5+ points, which on an SPX contract will rip it hard. And the risk is rather low in total, right? I mean, 100 to $200 for those of you trading one or two contracts. Can I go over an exhaustion candle? Sure. So SPY right here for me, right? I look at like exhaustion candles like Hanging Man's. I don't know if we had one this day, right here. So remember, go back to the Google Drive if you have the time today. Go to this video here, the 1129 hammer candles and tweezers. Okay, go watch that video, please, but I'll explain to you just a portion of that video. Right, a hammer candle shows strength when it's low, like in a base, right, in a like in a drop. Okay, so like you can see like this sold off, and then you got a hammer candle right there, right? But a hammer candle, not an inverted, I'm just talking about a plain hammer, a hammer candle on a big push up close to the peak and a large extension, right? This shows exhaustion. This is a hanging man candle, whatever you want to call it, inverted gravestone. There's a million names. I don't give a shit about the names. You need to know what these candles mean in terms of price action and what they're likely going to do. Okay, so this gave you an inverted hammer. We took the short right here, right? This gave you inverted hammer, and this also just gave you a plain hammer on a push-up, right? Look at these hammers as puzzle pieces, okay? This hammer candle on a big push-up doesn't show strength with buyers, right? Don't confuse that this, this shows strength. This hammer candle on a drop as it's pushing into a demand, right? Like you see that, the confluence, that matches, that puzzle piece fits. But this hammer here on a big push up over the high of day, so a fake out breakout, right, shows weakness or exhaustion from the buyers, right? They can't push it further. If they, if this got eaten up and they were really going to bust out of this, you would have seen like a huge candle like this, right? Like that. Oh, let me remove this. Like that, okay? Not an exhaustion candle like this hammer on the peak, okay? Now, same thing here. Let's see if I can find a good, I mean, look at this, right? Puzzle piece fits, inverted hammer, drops, right? Puzzle piece fits, hammers, right? Pushes up, okay? Inverted hammer here, big drop. Puzzle piece fits. Let's go to another day. Okay, look at this. Does this puzzle piece fit? Right? Oh, big push up, hammer candle. I think that shows strength. I think we're going to bust out a VWAP, right? No, that's what the novice retail trader thinks. This puzzle piece doesn't fit. So what's going to happen? It drops. Now, when it drops, and then it gives you a hammer, right? Then it gives you a hammer on the drop. That puzzle piece fits. And that's why you get a little push here for about a point. Okay? So does that make sense? Hope so. How does it show exhaustion? The first one I showed. Okay, because they were able to get pushed down, and yes, they pushed up, but they couldn't break a pivot, right? So it shows exhaustion. Okay, so like this got pushed down, but they closed over this preceding wick. So this got pushed down, but does it close over the preceding wick? No. So buyers are exhausted, right? Why? Because buyers were buying here, they bought here, buy, they bought even right here, right? So they're very extended, far away from cores or larger participants in the market. Maybe you're looking at the order book, right? And they couldn't push further. Okay, just like you, right? Like if you get tired, you're working out, whatever, and you can't, get that last rep in, whatever, you're exhausted, right? They try to push that last rep out, and they couldn't do it. They exhaust. They stop, or they sell. Okay. So, but I want everyone to trade safe this week, please, right? Huge volatile market, catalyst, CPI Tuesday, FOMC Wednesday, leading into Christmas and all these breaks and stuff. So don't try to hit it hard this week, right? Understand, CPI is before FOMC. Just because you get a big movement in pre-market, it's still the day before FOMC. So you're likely going to see buyers and sellers at a stalemate and small range consolidation. Focus on your orb levels, okay? Your first 30-minute candle. That's really going to help you guys out this week. And understand that FOMC guarantees a trend. You don't have to trade SPX. You can trade SPY Qs. You can trade whatever. Tesla, I don't care, right? But understand, FOMC guarantees a trend. Wait until after 2:30, right? Keep the risk small. Don't oversize it. If you're like, oh, Maple's saying it guarantees a trend, let me over leverage. Let me full port. Let me take, more because I want to be greedy. No, right? You take less on these days because of the range of the market. What typically pushes because of Powell's conference will allow your smaller position to grow, right? And compound due to that kind of percentage multiplier. So, ripcord question. Let me see, Shiny. I don't know if you can or not. I can't even set like an alert in Ripcord, right? Like I can't type out like at everyone and tag everyone. I have to go to Discord and do that. So I don't know. Ripcord can be pretty limited. Yeah. Okay. So I also see that Shiny said FYI for Strato's strategy. His friend Bear compared IV this week to CPI, and it is the highest in 12 months. So Stratos would need to be used with caution. I completely agree. Also check IV on other tickers, like maybe like Tesla or Apple, Amazon, something like that. How do you tell if PA is going during consolidations, like later on Fridays move downward, repeated touches on VWAP, but is that enough? Okay, so let me go over this, and then we'll call it. So right here. So repeated touches on VWAP, rejecting, okay? Look at ES. You have the same confluence there. VWAP, rejecting, but also pivots, right? Hey, this dropped down, pushed up, and then dropped. So that means there's a seller here. There's a pivot. You can mark a little supply zone, whatever you want to say, just drawing the wicks. So when it pushed back up and they couldn't close over this this high here, 396.29, right? That showed you that, hey, sellers were waiting there, right? They were lurking, waiting to get more or to sell more here, right? Now, I also had this, that's what I wanted to go over. There was this. Buyer's bid and seller's ask real quick. So, look at this. I have not touched this chart. I've drawn like little pivots, but I haven't changed the buyer's bid, seller's ask, or the orb levels from Friday. So we have these written out, right? So seller's ask was here, buyer's bid was here. It broke up based on the seller's ask and then pushed higher for another point or 2 points or so. right? But when it pushed down, right? I'll draw a little line just to visualize this a bit better. It broke down, bounced off the buyer's bid, retested the seller's ask, and that's who hit it, right? Look at that. So the sellers from earlier never completely covered, okay? And you're back in that buyer's bid and seller's ask range from earlier. This is from 10 a.m. Now you're sitting here at like 2 p.m., right? Okay, so drops down, right? Buyer's bids hit again. This is a battle. This is just, like I said, a stalemate between buyers and sellers, right? The auction process, they're just bouncing it back and forth. This is like tennis, okay? Boom, pushes through. He returns it. Bam. Okay, look, who's still there from earlier? The seller's ask at 396.18. Now, drops through. You already cracked the lower low. Now, this is where all the buyers right here stop out. Look at his buy candle. He stops out all the way down here. He sells, guys. Don't short at the buyer's bid. Short with sellers. Okay? Sellers are locking in profit, covering a bit here, right? Maybe not the entire position, but sell with them. Okay? Don't sell against buyers. Okay, this is where traders get trapped all the time, guys. Like I talked about it, like I think it was on Tesla, maybe last week or something like that. Oh yeah, right here. So look, I mean, look at this, dude. I love buyer's bid, seller's ask. Okay, seller's ask, buyer's bid. I'll just mark them green and red. Okay, so this is what happens to traders. It's like this. Okay, seller's ask identified, buyer's bid identified, some tweezers. Okay, so when it drops through, the sellers faded off. The retail trader is just looking at this. They're like, oh shit, bro, like we're about to go down to 171, right? But you don't short into the buyers, right? Like it's like running into a crowd and they're all stampeding against you, right? Like don't do that, right? Be patient. Trade with the sellers. Look at that seller's ask. I mean, I could extend this to the right even, or to the left. Look at that. Sellers they were there all day, right? So why sell down here when you could sell with them? Well, they've been selling all day, right? Sells off, pushes through, right? Think about the trader, the novice retail trader who's buying puts on the low of day break or low of day test or into the buyer's bid. They get bagged every time. Stop being that trader, right? Just be patient. A lot of traders are like, when they see this push up, they're like, oh man, we're about to rip to 180. Why do you guys keep thinking that? All right? Sit down, draw on Thinkorswim, draw on your notebook, whatever. What merit tells you that you're going to push up to 180? Where's the base on VWAP? You don't have it. You don't have the higher high break. Sure, you have EMAs, but is that all I can really rely on in the market? We're consolidating. No. What about this trader? Hey, I'm going to short off the 5-minute 9 and 20, right? What happened to him, right? EMAs were useless because you're consolidating. So, but yeah, for me, guys, I'm going to wrap it up here, right? I will be live tomorrow, 8:30 a.m. Eastern Time, just like always. I'll be live this entire week. Just on Wednesday, unfortunately, I won't be able to trade live with you guys during FOMC, but I'll try to pop in and chat and maybe throw a couple alerts out. So, yep, that's right, Shiny. So, you guys take it easy, right? I really hope that I was able to help you guys during this prep session leading into this new trading week. And just review, right? I'll post a homework assignment in the Discord when I'm wrapped up here, just so you guys can focus, kind of, warm up leading into the new trading week, and, just be prepared as best as you can. So, great session, everyone. Thank you all for your time this afternoon, and I hope you all enjoy the rest of your Sunday. See you guys tomorrow for the live trading at 8:30 a.m. Eastern Time.